All right, let's talk about the wild, wild world of investing. If you've ever thought about jumping in, you know it's not a straight line up. Nope, it's a full-on roller coaster, complete with those thrilling climbs and, yeah, those stomach-lurching drops. It's really not just about picking winners. It's about having the nerve to stay on the ride. So let's break down how to navigate all those twists and turns. Ready? Let's get into it.
You gotta love this quote we're starting with. Welcome to the wild world of investing, where the only thing more unpredictable than the stock market is whether your cat will love or loathe you today. It just perfectly captures the vibe, right? It reminds us that investing isn't some dry, boring science. It's a dynamic, sometimes chaotic adventure that requires way more than just a calculator. So, time to get our map ready for this journey.
First things first, every great adventure requires some prep work. And for us, that means putting on our financial detective hat. We're about to master the art of due diligence.
So what is due diligence really? Well, think of it like this. You're putting on your financial Sherlock Holmes hat. It's all about investigating a potential investment like your entire savings depend on it. Because, let's be real, they do. This isn't just some fancy finance term. It's your #1 tool for figuring out if something is a solid opportunity or just a story that's way too good to be true.
Okay, be a detective. That sounds great in theory, right? But how do you actually do that? Where do you even begin to look for clues?
To become a true #Sherlock of stocks, you can really just boil it down to 3 steps. Okay, step 1, question the hot tip. You know the one, the stock your cousin won't stop talking about at dinner. Yeah, interrogate that tip. Is it based on anything real, or is it just hype? Step 2, investigate the company. Seriously, go beyond the ticker symbol. Find out what they actually do. What do they sell? Who are they up against? And third, and this is crucial, truly understand the business. Does it make sense to you? Can you picture it succeeding in 5, even 10 years? The rule of thumb is, if you can't explain it simply to a friend, you might want to pass.
All right, so you've got your detective hat on, you're doing your research, but there's another challenge hiding on this roller coaster, the unseen hurdles. Let's talk about outrunning those pesky costs. And here's a hard truth every single investor has to face. Investing is not a free ride. I mean, we'd all love some magical investment fairy to handle everything for free, but in reality, there are always costs involved, and they can be a real drag on your momentum if you're not careful. Yep, welcome to the #fee fiesta. You've got management fees, trading commissions, account fees. All these little costs can just quietly eat away at your returns, especially over the long haul. So your goal isn't just to make money. It's to make sure your gains after all those costs are strong enough to make it all worth it. You got to be faster than the fees. Okay, so we've covered research, we've covered costs. Now for my favorite part, let's talk about finding the right match for you through what we're going to call the investment dating game. This is all about that fundamental trade-off, risk versus reward. And it really is the eternal dance of the investment world, isn't it? Every single decision you make is this delicate balance. You simply can't get the potential for those really high returns without also accepting higher risk. It's a tango every single investor has to learn. So when you're looking for the one in your portfolio, you'll meet 2 main types. Over here, you have the daredevil. This one's exciting, high risk, but high potential reward. It gives you butterflies, gets the adrenaline pumping, but yeah, it might just break your wallet. And on the other side, you have the steady one. Lower risk and lower reward. It's predictable, it's stable, and it's a whole lot less likely to leave you heartbroken. So which one is right for you? Well, that question leads us perfectly into our next part, finding your own inner daredevil. This is where the journey really turns inward. It's time to ask, what's your personal risk tolerance? It's such a simple question, but it's probably the most important one you can ask yourself. Which one are you? Because the best investment strategy isn't some universal formula. It's deeply, deeply personal. So are you the cautious skydiver? You know, the one who checks their parachute 3 times before jumping? Someone who prefers stability and protecting what you've saved above all else? Or are you the daredevil? The one who eats cereal without even glancing at the expiration date, totally comfortable with some turbulence in exchange for a shot at bigger growth. There is absolutely no right or wrong answer here, but you have to know which profile fits you so you can build a portfolio that actually lets you sleep at night.
In the end, this whole journey is summed up so well right here. Investing is not for the faint-hearted. It's for the brave, the bold, and those who don't mind a bit of turbulence on their way to financial freedom. That's really a call to action, isn't it? It's a reminder that this ride takes conviction and a steady hand. So, let's run through our journey checklist one last time. First, always wear your detective hat and do your due diligence. Second, keep an eye on those fees so you can outrun the pesky costs. Third, understand the investment dating game, that trade-off between risk and reward. And finally, maybe most importantly, know thyself. Understand your own personal risk tolerance.
So, we've laid out the map for you, we've pointed out the landmarks and the challenges along the way. The only question left is the one right here. You've seen the map. Are you ready to start the trek?